My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video and read this disclosure. Thank you. And position disclosure, no new swings. Still, I did add a bit more tell today as that went down quite a bit actually. But part of the game plan, definitely not anything I'm unprepared for, as much as annoying as it is. So yeah. So let's talk about markets today. So I titled the video "Bulls Stay Strong, but not strong enough for 3,800 yet." So going over the major indices, S&P pretty much got to 3,800 today. Futures poked 3,800. They got to like literally 3,801, I think, and then back down, and that marked the high of the day. So finally, we have reached the 8-day ADMA after 7 days being away from it, extended from it, partially price correcting, partially time correcting. Finally reached the 8-day and a decent tail off of it. Not the worst close. Pretty much like on the bullish scenario, this is probably the worst close you could have. In a general scenario, it's not a great close for the Bears, so it's a good close for the Bulls, pretty much closing right at 375. But you would have liked a little bit better than that. Q's got above their 8-day. They hit their 8-day yesterday, but failed to close above it, back below it. Definitely a bigger tail there. More exciting for the Bears for that tail. And IWM not even able to get to its 8-day, not even able to get to 170, and not too bad of a tail, but arguably relative strength because not too bad of a tail, arguably relative weakness because it's the only one that hasn't got to its 8-day. The Dow, same thing as the SPY, really. So 3,800 is the level we've been discussing for the past few days now because that is the open of the Maribozu from last Thursday on the futures chart. So this is the candle on SPY from last Thursday. It looks like a huge gap down with a smaller red candle because, well, that is what it is. But if you look at, let me bring up my futures chart. And I share this in my morning note if you read that, but I know people on YouTube obviously don't get that. So here's one of the futures charts I look at. This is off investing.com. That's not what our daily candle looks like. What does our SPY daily candle look like? Yeah, okay. So again, kind of a false tail here. But the point of this is to show you this Thursday candle. So this is Thursday's candle for futures. Big red Maribozu. You don't see it as well in SPY because of the gap down, but this is what we're bear flagging off of right now. So broke down support, huge wash down into CPI, terrible CPI, bad follow throughs from CPI, which is well deserved due to that CPI number. Bear flag off of this candle, breakdown for another bear flag. And now we're flagging off this. So the open of this candle is pretty much is 3,800. It's 37.94. The high is 38.28. So 3,800 to 38.25 is like a tough resistance zone. Even before this candle came in here, right? We got up to the 5-day here, tailed back down, didn't close above 3,800 here. We closed 37.89 on this candle. So this is what I've been talking about every morning when I'm saying we're looking better. Like after yesterday, and after yesterday, we were definitely looking better. Today's gap down was pretty crazy. I suppose that's why actually this candle looks like this, because the futures were just so volatile. But we gapped down 1.5% this morning on SPY. Definitely a decent gap down, something to be worried about. Nothing to go sell everything and run and hide about, but something to be a bit nervous about. But quickly, we laid out the game plan after the open. Bullish, bearish. If we're going to be bearish, we should probably do this. If we're bullish, bulls should come in pretty early and try and save us, and that's exactly what they did. But so we're looking better, but we're not confirming anything yet, and we're not going to until we close above 3,800. 3825 is even better, but until we at least close above 3,800. And now this 10-day has also come down as well. So that's our futures chart. So let's go back to SPY. So, yeah, let's take a look at the intraday action after everything I just said, where again, we're looking better than we have in prior days for sure. We're looking better, like buyers stepped in today. I guess that was the main takeaway from this morning. So first of all, today and yesterday have both definitely thrown me for a loop in terms of intraday action. It's definitely been surprising to me both days. I feel like, just because the market goes down on a day doesn't mean it's a bad trading day. A bad trading day to me is more a day where, pretty much it like doesn't follow, not that it doesn't even follow your game plan, but it just doesn't really seem to make all that much sense. So yesterday and today have definitely gotten me on the more frustrated side in terms of, we gapped up huge yesterday, just ripped straight right off the open. Okay, short covering rally, yada yada. Huge gap down this morning. Bearish side, we time correct for 20-30 minutes, moving averages catch down, and it's a gap and go to the downside. Bullish side, bulls step in right away, and right away, literally even in the first 5 minutes, you could see it. Bulls stepped in right away, price correct. But for us to then just keep on ripping through all of one, to have us gap down this much, surprising, and then two, for us to just rip all right through yesterday's price action and then some. Definitely, at this point in the morning, I was just like, wow. So definitely a bit tricky the past 2 days, in my opinion, even though sure we've had some up action during the day. Personally, I found it a bit tricky. And then same thing as yesterday, only we definitely had a bit more volatility today. We had a few Fed speakers today, at least. I think like 2 or 3 people were speaking. And Biden spoke about gas in the middle of the day as well, gas prices. So a bit more intraday volatility here, but for the most part, and the intraday flow showed it as well. After like 11 a.m. or so, just not great, just not too much going on. And you can always look back at a chart in hindsight and be like, oh, could have shorted here and could have bought here and sold here and flipped short here. But obviously, you guys know, in like the heat of the moment, it doesn't quite work that way. So again, a bit more intraday volatility, but for the most part, nothing too great in the middle of the day here, and then end of the day rollover. This is where we poked 3,800 in futures right here, and then immediately just smacked right back down, and that really broke this trend and rolled over into the close. MOC was to the sell side, nothing crazy though. So past 2 days have definitely confused me, or maybe not confused me, but just like thrown me for a bit of a loop. So where does that leave us going forward? So, how are we going to gap? I have no idea. I mean, gap up 2%, gap down 2%, no gap at all. I have no idea at this point. So we'll see how we gap for tomorrow. This 30, it's becoming more and more clear, and I guess it's a little bit lower on SPY because I believe last Friday SPY went ex-div, so that lowers the price in SPY, and that's when you see a bit of a divergence in SPY and the actual SPX for at least like a few days or so. But it's roughly 378, 378.50 on SPY, but for sure, clear as day, 3,800 in futures and SPX. That's the level that we need to get above, reclaim, stay above, and then if we can do that, then 385 for sure, even 3,900 is possible. Yet another bear market rally where we want capitulation, doesn't happen. We want capitulation, doesn't happen, but the bigger picture narrative is still the same. It's still bearish. I mean, maybe we just wait till the next CPI number at this point. We'll see. Obviously, a day-by-day thing. But so 3,800 we need to get above. Keep it simple. At this point, I'm just like talking to myself as much as I'm talking to you guys. At this point, just keep it simple. We need to get above 3,800. And I was kind of saying this at the end of the day yesterday too, right? Like, it's bearish that we quote unquote, failed, whatever you want to call this tail off the 8-day. It's really not that bad of a close though. And it's good to see that bulls stepped in today in a pretty impressive way. So you got that for you on the bullish side, but on the bearish side, we're not above the level. It as bullish as today was, it's a lot of just intraday chop and volatility. So you got that on the bearish side. So not the best close, not really a bad close either, I don't think. We need to get above 3,800. Otherwise, the more, so similar to what we were doing like over here when we ended up breaking up, the more you go sideways, the more bearish it is. But then the more you bump your head against resistance, the more likely that resistance is going to break, right? So like over here, we chopped around a lot, went sideways for a bit, and then came up, and then finally broke through. This was, 400 here? So this was like 3-ish days or so of coming up against 400 before we finally broke above 400, and that's when we broke above the 8-day. So similar situation starting to build out right here, only just 400 is now 380, or 378-ish in SPY, where it might not be tomorrow, but again, the more we go sideways, the more likely we should break down. But if we don't break down and keep bumping our head against 3,800, the more likely we actually can break above the 8-day, make a quick run for the 21-day, which has some decent room to the upside here. So I think after these past 2 days, you still, all in all, have to be a bit more bearish, just because, again, we're in a downtrend. Moving averages are sloped down, everything like that. But you can definitely be a bit more, personally, I'm a bit more neutral than bearish, again, because we're in a downtrend. But like I just said, we're starting to really bump our head up against this 3,800 and not break down while we do that. So, VIX reclaims 30 and shoots to 31 plus, we will probably break down and 3,800 will fail. But if VIX can keep being tame, so let's look at VIX real quick. Okay, so back in this, so I just talked about how we were like building out a pretty similar situation to here. So I talk about how markets pretty much bottom in two ways. They either capitulate with extension or they base out and break up. So these two bottoms were downside extreme, extension with capitulation. And then this was more of a base out breakup. This was more of a base out breakup. And we're starting to at least look like we're building out that base out breakup scenario again. So what did the VIX do over here when this happened? Let's take a look. This was like the end of May, right? Yeah. So end of May here, the VIX was consolidating just like it has been for the past few days here. And then it started to really break down, and you see it losing its 8-day, and then it rode its 8-day down for multiple days. So these, not right here and not at the end here, but in the middle, these like 3 to 4 to 5 days in the middle of riding this 8-day down, it looks like that could be starting to initiate. 8 days, curled down here on the VIX. We did close below the 8-day. This could be a similar candle to like this day here, for example. And so if we start to see this for the VIX here, that will most likely lead to a breakup through that magic, or not magic, but that important 3,800 level, and then that through that 3,800, easily 385, if not 390. And then what did the VIX do after? That's when we broke up here, and that's when we went sideways. And then as we went sideways for what seemed like a bit too long, VIX went down and down and down and down, and it got to the point where, okay, what's more likely? It looks like the S&P should break up, but for the S&P to have a nice real breakup, you would need like another real lower in the VIX. And it got to the point after 1, 2, 3, 4, 5, 8, 9 days down in a row, that it was probably more likely for VIX to bounce than the S&P to break up, and then that led to this rollover, which broke support, and then CPI, and the rest of the story. So just to do a little chart work and history lesson there, I guess, from short-term history, it looks like we might be trying to build out something like that here. Today's candle might be like today's candle here, where again it's just the first day, it's a tail off, so it's like the real first test of 3,800 today. Wouldn't expect us to break through tomorrow, but let's see now. We'll see where we gap. 370 definitely important to the downside as well. 370, 380 here. Was this like 390? Yeah, it was pretty much the same story here. 10-point range, 400, and then 390, which even on this day we tailed below 390, but had a great close. So where we are here, I would say we're right about here, where we might get another 1 to 2 days of chop, where we don't break up, but we don't break down either. 370 on the downside is important. 378, 380 on the upside. So we'll see if we get another 1 to 2 days of chop, which would set up for a VIX breakdown and this to break up. And if we do break 370 and we close below 370, then you're in a daily downtrend with your moving averages pointing down. So you got to go, the trend is your friend. Don't fight the Fed, right? But let's see now over the next day or two, if we chop a little bit more, if we hold 370, and the more we hold 370 and the more we bang our head against 3,800, the more likely we are to break it up through. So I'm not predicting an up move in the market in the coming days. I'm just saying it's looking much more likely than it has in the past week or so. Despite the, we did get extended down here, I know that, but it felt like it needed to be a bit more extreme. And then we had this, Morningstar doji, huge gap up, huge buying off the gap up, short covering. And then today, huge gap down and some real buying stepped in today. So yeah, that is the market and what I think we can look for going forward. Anything special from today? Let's look at the list real quick. I don't think there was anything too special from this morning. We mentioned AMD as being a good risk, which AMD did not close well today actually, but as a good risk gauge as well as the IWM. And AMD was pretty great all pre-market, literally bid up all pre-market into the open and then right off the open here. So AMD was okay, but this ended up rolling over. Tesla, I talked about it yesterday, the daily relative strength, positive divergence, yada yada that Tesla's been showing. Tesla was pretty great off the open. We mentioned 700 to 705 it had to reclaim. It did that right off the open, but also ended up rolling over and not closing fantastic with the market as well. Not a big tail for Tesla, but this daily chart, it's better than pretty much everything else that's like a big mega cap name like that. And then the only other thing that looks okay was we mentioned USO support, the 7850. I don't think did energy stocks trade okay. Energy stocks trade okay, but this will be one to watch going forward as well. With USO, I had a really nice breakdown here, but this morning we mentioned 78.50 support. That more or less perfectly held right off the open. Things didn't go. These things didn't go right off the open. They chopped around a bit, but the levels held, and then they eventually broke up when the market, just absolutely went on a tear for the first 2 hours or so. And then some volatility midday. I think Biden spoke about gas prices either right here or right here. But yeah, USO oil held support. So this will be interesting to watch for the market going forward. If this starts to break back up, probably won't just shoot right back up tomorrow. It is extended to the downside though, but interesting to see this hold support. And this will obviously be important to watch going forward as well. And that's all I really got. That's my rant about the market and what it's been doing and what I think it might do. Which is, I don't know, and be prepared for anything, really, but in a strategic way. So, yeah, that's all I got. Happy to take any questions, comments, concerns, complaints. So, let me just read through real quick. Why do you keep saying 3,800 when you look at SPY? Yeah, I thought I answered that, what Jackson said. So I'm saying 3,800 because normally it would and should be SPY 380, but SPY went ex-dividend last week, and when stocks go ex-dividend, if their dividend's $1, the stock price goes down $1. Dividends aren't just magic money that come out of nowhere. So when SPY goes ex-dividend, that happens to it, and then it takes a few days usually. There's usually a bit of a divergence between the price of, 380 in SPY is supposed to be 3,800, but you can see the high of today in SPY is this 378, upper 378s. But if you look at futures, ES, look at this crazy candle today for the futures market. The high in the futures today was 38.05. Yeah, 38.05. So blipped above 3,800 and then back down today. But so that's why I'm saying 3,800, because the futures S&P is what matters. SPY moves off of that. So that's why I'm saying 3,800, but use roughly 378.50, I think, for SPY. It's not super clean here. And again, SPY went ex-dividend, but 378.50 roughly. It's not perfect, but roughly 378.50. I hope that makes sense, Alan. Could you talk about the relationship between VVIX, VIX, SPY? I get the basics, but is there anything specific you're looking for? Yeah, the boot camp is... Who asked about that, Pete? It's in a different room. I believe it's a different VTF, so it should be in your T3 Live portal. And if you're asking about it, I'm sure you have access to it. So... yeah, go back to if you're supposed to be in there, I think it just started, go back to your T3 Live portal and look for that VTF. So can I talk about the relationship between VVIX, VX, and SPY? I get the basics, but is there anything specific you're looking for? No. So usually the real divergences happen on a daily, a multi-day occurrence. Let me think of a recent example. I guess the recent example actually, which I do keep talking about, is this S&P breakdown and how you could have fairly early seen this breakdown coming before support broke for S&P. So one, again, was the VIX exhaustion to the downside. But what led this, so here's your VIX chart, right? And then here's VVIX. So this is June 8th. So on June 8th, VIX gapped up a little bit and sold off. Doesn't really look like too much here on June 8th. Little gap down, sold off. Doesn't really look like too much. S&P on June 8th, little gap down, sell down. Doesn't really look like too much. S&P and VIX look pretty similar here. VVIX with a huge gap up. Gapped way above the previous candle's high and all that. Still ended up selling and closing down, but this was the first major divergence, and I definitely remember pointing this out. First major divergence here. And then the next day, this is June 10th, or sorry, June 9th, right? That was June 8th, so June 9th. So the next day, June 9th. So here's your 15-minute. My friend and I that both like to track the VVIX, we always really look at the 15-minute trend for this. So here's the day it gapped up, price correct to the 15-minute ADMA, which this is totally bucking the trend here. And then here's the next day where gapped up, time corrected, and then just rode this all day. And somewhere around here is probably where the S&P broke support. So that's the most recent good example that I can think of off the top of my head. I don't know why that scrolled out all the way back there. Wow, this is a pretty ugly candle here today. So this could even possibly be leading to the downside now. But the general idea is, I'm trying to think of how to say it right. The general idea is you can usually find divergences in the VIX in such a way that can help you predict future moves of the S&P. And so usually, as a common rule of thumb, the VIX will top a few days, 2 days, say, before the market bottoms. So for example, let's take a look at this. So VIX didn't even reach these highs in this past market bottom. VIX got to, and this was the bullish divergence for the VIX that we talked about, where we were saying VIX is either going to go 40, 45 plus in capitulation, or this whole year has been one big VIX positive divergence. But so VIX here didn't even get to previous highs while the markets made new lows. And typically the VVIX will be even sooner. So I've seen times in the past where VVIX deviated an entire week before the market made its move. So yeah, general rule is it's just it can be an early indicator, especially based on the daily. And it's anywhere from 3 to 5 days or so where that early signal can come in. For this day, it was a day and a half or so, but just this gap up alone was, that it's a huge discrepancy between what the S&P chart and what the VIX chart looks like that day and what this looks like this day. So I hope that helps a little bit, Bill. Does it matter for entry if you enter at the end of a candle versus the beginning of the next candle? I feel like I have less success when I enter at the end of a candle. Well, No, it shouldn't matter because the end of a candle is just time. You know what I mean? Like it's just closing because that 5 minutes is up. So if you're like if you're talking about like a 5 minute chart, I mean maybe it'd be a little bit better if you had an example. But say you buy like I don't know, like say you buy this inside 5 and SPY. If you're gonna buy the end of a candle versus the beginning of a candle, the way you're making, at least the way you're making it sound like to me is there's not much of a difference between that time. That's different than you saying like, oh, like buying in the middle of a 5 minute candle where the candle still has another 2 minutes of price action to go before it closes. That's different than saying, buying like 5 seconds, 10 seconds before, or 5 seconds, 10 seconds after. I don't think that really is too much of a difference. But so like say, if you buy the end of this candle here, like say you buy this inside 5 here and you buy the end of this candle here, your out really should be the low of this candle. So if you waited and bought in this candle, maybe you got a little bit of a better price, but it doesn't really, the trade works out. It does, and even if the trade doesn't work out, it shouldn't really matter if you have the right out. Yeah, I mean more towards the middle, I guess. So, yeah, you can't buy a candle. I'm trying to think like how to word it. You can't buy a candle based on what it looks like in the middle of a candle because the candle doesn't look like that because again, it's the middle of the candle and there's still more time to go before the candle closes. So like this candle here probably looked exactly like this candle did at some point here when it was at highs, right? But the candle might have had another 2 minutes to go or something like that, or even, minute and a half or anything. The candle's not closed, so you can't buy it based on the look of the candle because the candle hasn't closed. So you wait till the candle closes, the candle ends up closing like that, then you wait, for a better signal to buy, then you wait till the end of this candle closes or pretty close to the end of it anyway, and it ends up closing like that, then you can buy off this candle because that's how the candle closed. So I think you're, like, do you know what I mean? Like you're saying buying, like I guess what I'm trying to say is don't buy a candle, don't enter a trade based on how the candle looks if that specific candle you're buying for that trade hasn't closed because it just that candle doesn't exist yet. It is not of this planet until it closes and then it becomes a candle. But while that candle's open and going, it's it's still forming. It's still in the womb, I guess. So don't buy a candle. Don't buy a 5 minute candle if it's still. I'm not saying don't buy a 5 minute candle like in the middle of the 5 minutes either. Like I'm not trying to make it sound like that, but I'm like, my point is if the reason for your trade is that candle, that can't be the reason for your trade because that candle doesn't exist, and it doesn't exist until the candle closes, and then okay, the candle closed, that gives you the information from the past 5 minutes. This first 5 minutes after this candle closes, after, not like in the middle, but after, it tells you, okay, first 5 minutes mostly had buyers. It was a pretty volatile first 5 minutes, but definitely buyers are in control. Then after this candle closes, it tells you, okay, that was a total battle between buyers and sellers. I don't really know. I know that buyers started the day off with control. Here it's a bit of a fight. Then this candle closes and you say, okay, buyers started off in control. They fought a little bit here, but buyers seem to really be taking control here. That's the way you should be thinking about it when you look at charts. And when I say like charts, like money doesn't move because of a chart is just a picture of the money moving. So like don't look at this and be like green candle, red candle, green candle. Look at it and be like, okay, buyers versus sellers, buyers, sellers, buyers and sellers, buyers. So yeah, hope that helps and makes sense. Yeah, if you're anticipating too much, you're probably only focusing, maybe you're not doing this, but I bet that what you're doing is getting a bit too zoned in on like just one, like your 5 minute chart. Like, I don't know if you're only looking at this, but it sounds to me like you might be getting a bit too zoned in, where you got to be thinking, you're not buying like this candle to sell it at the high of this candle. Like, you're buying this candle because, we just gapped down a lot, and, SPY could move from 371, 372 to 375. And that's why, you got to know what your 15-minute chart looks like. You got to know what your daily chart looks like. Your daily chart, you got daily chart reward all the way up to 378. So that's why we say, you're executing on a 5-minute chart based on 5 or whatever, 5, 15, 2, I don't really care, whatever works for you. But you're executing on a smaller time frame chart with bigger time frame reward in mind. That's why you don't risk 50 cents to make 50 cents in SPY, or risk $1 to make $1 in SPY. You're risking $1 to make $3, $4, $5. And you can make that $3, $4, $5 based on how the bigger picture, the bigger picture looks, right? So, yeah, hope that helps. Which moving average is the yellow one, SPY? That's the 8-day EMA. So we mainly look at the 8 EMA and the 21 EMA. I also have a 5 and a 10 simple on my futures, but I more look at that for the slopes, as much as where they are. I care more about where the 8 and 21 are than I do about the 5 and the 10. And both I care also a lot about how they're actually sloped. But yeah, this is the 8 EMA and this is the 21 EMA. I know it perfectly tailed off it today, but there's plenty of other days where it pokes through and comes back down, and pokes through and comes back down. So, don't just buy or sell just because it's right there. You got to have other factors. Is the class for everyone? That's from Monica. Yeah, Bill. Usually, yeah, like 5, either daily divergences or, in the last, say, like, you have, like, a day where you trend up all day in SPY, like, say, I don't know, say, like, a day like yesterday. I think this kind of happened yesterday, actually. Interesting. Let me just check. What was the open today? Yeah, so this is today's open. So yesterday, I guess a smaller example would be SPY super strong all day, making new highs into the close. But at 2:30 and on, SPY is going up, and while SPY is going up at 2:30 and on, I think the VIX also went up here at that time, but 2:30 and on, VVIX is ramping up pretty aggressively with SPY at 2:30 and on, right? And then, we ended up gapping down in a pretty big way today. But that's, pretty good, either daily divergences or, you start to see, accelerated price action in one way or the other, or some divergence like that. Does the tape help pick an entry point? Tricky question. So, yes, it can, but it takes time and like practice and experience. Like, I don't want to just say like, oh, you can see the buying come in, but in a way you can, and it happens in multiple different ways, whether you see like a buyer step in and absorbing the selling, or you can kind of just see like a change in the tape with the bid and the ask as well. So yes, it can help. It helps, I feel like, with like this, like the absolute smallest, like you're trying to be picture perfect with your execution. If anything, it helps with it can help with counter trend. So okay, so all in all, the answer is definitely yes. Okay, now I'm like thinking about my answer, and I keep thinking new things as I'm talking. It can definitely help with counter trend for sure in like very extreme situations, and it also it can help with breakouts as well. But charts can tell that picture as well. But when you see like AMD, I think today did this a bit, where AMD came up at 85 and was struggling with 85, and then finally broke through 85. You can just see they keep buying 85. But I feel like it helps mostly with pinpoint specific, like extreme counter trend trades, where say something's going parabolic to the upside, and whether it's a short puking out or just a momentum algo that is going and going and going until it finally triggers to stop, and then it stops. I feel like that's where it helps more in those extreme situations where you're going counter trend and like extreme extension. So the answer is yes, but I wanted to say it carefully because I don't want you to overread the tape and over rely on it. Charts definitely matter more, and the tape definitely has a lot of noise in it. So it can help, but don't overread it. But if it helps when like personally when I'm entering a trade, I definitely am doing it based off charts. But when I'm actually like pressing the button, I am watching the tape. Or like when I'm deciding to get ready to press the button, I am watching the tape and not staring at the chart when I actually press the button. So I hope that helps. Looks like I got through all the questions. Any other questions, or good to go for tomorrow? Looks good. Okay, so again for tomorrow, how we're gonna gap, I have no idea. Flat, up a lot, down a lot, no idea. It's been pretty hard to predict for the most part, but again, we're looking better than we have in the past, at least week plus for sure. Let's see if over the next day or two we start to build out a scenario here where we keep bumping our head against 3,800. If we break through 3,800, then for sure we can definitely rally. But we got to get above it first, right? So we'll see if we can break above it. If not, we'll see if we can keep bumping our head against it, but also holding 370 on the downside, 3,700 on the downside, and we build out something where we can eventually break up through it. Otherwise, careful if we lose 370 on the downside. So yeah, that's we'll see how we gap, and that's it. I'll see you guys tomorrow morning. Have a good night, everybody.